Hello guys, a very good afternoon to everyone. Welcome to Global Online. So we are here for preparing NTA UGC NET June 2024 cycle. Today we are going to discuss the most expected MCQs on the unit number 2 accounting and auditing. So yes, this is Dr. Swati, your educator. Let's start our lecture, but before we going ahead, just quickly I will like to tell you about the Global Online. Our upcoming classes will be started from the 6th of the May, and here you will get a complete course on commerce and management. If you register yourself for paper 2, you will get a 20% of the discount in the on the fees, and in this amount you will get paper 1 plus paper 2 plus paper 1 is free of cost. Okay, and you will get daily live lectures, and here you can also clear your doubt with your educators in the daily live lecture. Here you will get complete syllabus notes in PDF form, so you will get study in you can download this in your mobile phone, and you can do study in anywhere anytime. And here I will going to provide you the full syllabus mock test, PYQs with detailed solution, more than 4,000 MCQ series. And for more detail you can get in touch with this WhatsApp number is given in your screen. Okay, and yes, this is the interface look like our Global Online. For getting Global Online, you have to go to Google Online, Google Play Store, and download the Global Online app. Here click on the store button in the home interface, then search on the search bar. Okay, like this you have to search your course what you want. Here you will get all the notes of the paper 1 plus paper 2 in the unit wise in the folder, so you will easily recognize all your material. Okay, so let's start with our first question, that is indicate the correct code as a regret the source of the fund for a fund flow statement from the following. Actually this question is about the source of the fund, which is comes under the fund flow statement. What is the source of the fund? Source of the fund, the thing is that where you get a fund. Okay, from the from which sources you will collect your fund, and and utilize that fund in your business. So that's kind of fund. You know that in the if you're familiar with the format of the fund flow statement, in that fund flow statement, here I have will provide you, you can in it, which is in your screen. That is it is a format of the fund flow statement. This side, that is a debit side, is for the inflow or the source of the fund, and the it is a credit side, that is the application. Okay, this is application side. You can outflow of the fund flow from the operation. Okay, this source, this is debit side is for it's you can see there is an item which is it's a inflow of the source. Okay, so fund from the operation, then the sale of the fixed asset, then the sale of the investment. You know that this is if you sell your fixed asset, if you invest, if you sell your investment, you get inflow of fund, and you can utilize that fund in your business, like issue of share, issue of debenture. If you issue share and debenture, you will also get a fund. Okay, inflow of a fund in your business. Then loan taken, then dividend received, non-operating income. Okay, dividend, if you received a dividend, then you also you see this is an inflow of a fund, non-operating income, and decrease in working capital. You have to learn these things, and if you keep in your mind, that is the decrease in working capital is comes under the debit side of the account. Okay, debit side of the statement of the fund flow account. And increase of the working capital, it's a kind of outflow of the fund. Okay, so in you can see in the application side and in the outflow side, that is the fund lost in operation. If you lost your fund, that means your outflow means the fund is going outside from the company or from the business. Okay, so that means if you lost your fund, if you purchase a fixed asset, if you purchase investment in that kind, what happened? If you purchase, the cash is the a fixed asset is coming in your business purpose, it is utilized in your business purpose, but the flow of a cash is going outflow. Okay, the redemption of preference share, redemption of debenture, this is also kind of a outflow of a fund. Okay, then the loan paid, if you paid repayment of the loan or dividend paid, non-operating expenses. Okay, here is a non-operating income is the inflow. Okay, and non-operating expenses is the outflow. Okay, so the expenses is kind of outflow, because due to expenses you outflow your fund outside the business. So this is actually look like a, this is actually the format of the fund flow statement. So according to this statement, what will be our right answer? The option number 1, increase in working capital. Option number B, decrease in working capital. Option number C, return of the intangible fictitious asset. Option number D, issuing equity share of the acquisition of the building for the office. And option number E, charging depreciation of the on the fixed asset. So what will the right answer? You can see in increasing working capital, it's a application. If your working capital is increasing, that means it is outflow of a fund. So option number A is not our right. So if you can see, the option number A and option number B is going to be cancelled, because I'm sure about it, that is option number A is not a part of the source of the fund. Actually option number A is a part of the application of the fund. Okay, then the decrease in working capital, yes ma'am, decrease in working capital, it's a part of the source of the fund. So B is a sure shot, that is B is will be your right answer. So you can see that option number B and option number C, so option number B and option number D having the B option. Now, returning of the intangible fictitious asset. In this case, intangible, you're returning of intangible fictitious asset. That means your amortization. Okay, in this this is a kind of amortization. If your uh, return of your fixed asset, this is kind of depreciation. So what happen if you deduct your depreciation, or if you amortize your intangible asset? So actually this is it's a kind of you're saving your money. Okay, so that's, if you're saving, that means it is just, if you, and that money you can utilize it in your source of the fund. Okay, as a source of the fund. So the option number C and the option number E is also the correct answer. Now moving ahead, that is option number D. Option number D, issuing equity share. Ma'am, issue equity share is also in the source of the fund, but no, you have to read the question, read the full sentence careful. That is issue of the equity share for acquisition of the building or for the office. You're issuing equity share for not not for the fund. Okay, but you are issuing equity share for the acquisition of the building. In that case, this is not a kind of the source of the fund. Okay, so what will be the, what is our right answer? That is option number B, option number C and option number E. So what will be the right answer? Option number B, because you see the B, C and E here. So option number B is our right answer. Okay, for this question. Now moving ahead toward the next question, which is in your screen. Which one of the following is not an example of the financing activity? Which is not an example of the financing activity? So in with reference to the cash flow, okay, which is not a financing activity. Now, option number A, repayment of the loan. Yes, if your repayment you're in, it's a kind of financial activity, because you take a loan from the bank and now you're repaying. So it's kind of financing activity. Now, option number B, interest on debenture or dividend paid. It's also in financial activity. Yes. Now, cash proceed from public deposit is also in financing activity. Now, the option number D, that is sale of fixed asset. In the sale of fixed asset, this is not a financing activity. It is a investment activity. Okay, it is an investment activity. And what the question is talking about is it's not an example of financial activity. So yes, sale of fixed asset. That means option number D is our correct answer for this question. Now, moving toward the next question, which is in your screen. Which one of the following combination of the rules stand true while preparing the schedule of the change in working capital? Now, you have to understand what are the changes affecting working capital. There is a there I will shortly tell you about the relationship of the working capital with working capital relation with current asset and working capital relation with current liability. Okay, if you can see, there is a thumb rule you have to learn, you have to remember, you have to keep in your mind, that is, there is a direct relationship between the current asset and working capital, and there is an indirect relationship, or the you can say inverse relationship between the current liability and the working capital. If current asset is increasing, working capital is also going to increase. If current asset is decreasing, working capital is also going to decrease. So you can see that is a direct relationship between the current asset and current asset and working capital. Now, if the current liability is increasing, working capital going to decrease. If the current liability decreasing, working capital going to increase. So it is an inverse relationship between the current liability and working capital. Okay, so according to whatever the concept I have told you, so according to that, what will be the right answer for this question? Option number A, increase in current asset, increase in working capital. Yes ma'am, this is correct, because there is a direct relationship between the current asset and current working capital. Now, increase in current asset, decrease in working capital. No ma'am, this is wrong. Increase in current asset, decrease in working capital. Yes ma'am, there is an inverse relationship between the current liability and the working capital. Option number D, an increase in current liability, increase in working capital. No ma'am, this is an inverse relationship between the current liability and working capital. So according to this question, what will be the right answer? That is uh, option number B is our right answer. A and C. So B is our answer. Now, next question, which is in your screen. When the total of the both the side of the balance sheet is converted to 100, okay, and each item is shown as it's carried out to more than the 2 year, is known as percentage of the total. Yes, and this is exercise is carried out for the more than 2 years. This analysis is known as the option number A, index analysis, option number B, trend analysis, option number C, dew point analysis, and option number D, common size analysis. You can see this is our balance sheet. Okay, here you can see this is the liability side. Yes, and this is an asset side over here. Okay, what the question is talking about, when the total of the both asset, where the total of the both asset balance sheet is converted to 100. Yes ma'am, it is converted to 100. Each item is carried out, whatever the items in the liability side, in asset side, okay, out of more than 2 years. So it is carry forward, you are carried out for more than the 2 years. Now this is called as this is known as a percentage of the total. Yes ma'am, and this is exercise is carried out more than 2 years. This analysis is known as, we are also carried on this actually the items is which are we are carried out from the last 2 years, and again we are showing this carried out for more than 2 years. What is the kind? So you have to first, you need to understand these all the concept. What is index number, what is trend analysis, what is dew point analysis, and what is common size analysis. If you understand this all the options very well, you can easily recognize the answer. Now, what are first option, that is index number. Index number is actually is a kind of method to tracking the performance of a group of asset. What group of assets in this standardized way, in this standardized way. So index number is for actually it's a grouping of the asset in which this in the standardized way is show. It's calculate, it's track the, okay, it's like analysis, it's a tracking. Now trend analysis, it's a track it's a technique to attempt to predict the future. It's for the predict the future. Okay, how to predict the future, to evaluate, to identify the pattern, to identify the trends and change the data. And due to that, you can see this analysis, you can see this, all the changes will happen in the date of over the in the period of the time. Okay, so this is a trend. Okay, so actually trend is predicting the future on the basis of the historical data. Now, the option number D is dew point analysis. What is a dew point analysis? Dew point analysis is it's an analysis and extended analysis of a company. What happened here? You can calculate, you can analyze the ROE. And what is ROE, ma'am? ROE means a return on equity. So how much you get a return on your equity, that is calculated by the DO point analysis. And this point is really important. I have put more question from this point, so we will discuss this DO point analysis in the next session, next lecture or next video lecture. Okay, so the basic idea you will get, that is the dew point analysis is for the ROE. Now the D option, that is the common size analysis. Common size analysis, it's a kind of, you can also know it's this common size analysis is also known as vertical analysis. Vertical analysis. Okay, it's a vertical analysis. Now, what are the use of this? It's used to analyze a financial statement. Yes, balance sheet is a financial statement. To evaluate the financial statement by expressing each and every line, expressing each and every item in a percentage. Okay, so that's why you can see this is and converted to the 100. Yes, and this is called as percentage. So the percentage is related to the common size analysis. So option number D is here our right answer. Hope so you understand the concept behind of the each options which is given in your question. Now, the question number next which is in your screen, it is actually a matching concept. Okay, so in this question, the list 1 and list 2 is given here. Okay, now the list 1 is a debtors turnover ratio, operating ratio, proprietary ratio, operating ratio, and the asset test ratio. Of list number 2, solvency ratio, liquidity ratio, activity ratio, and the proprietary ratio. So in this question, you can easily connect the acid test ratio to the liquidity. Okay, yes, acid test ratio, that means the how quickly you will convert your stock, your convert your items into the cash in a liquid form. Okay, that means a cash form. So that item is called the acid test ratio or liquidity ratio. They are connected to each other. Now the data turnover ratio, you know that in the turnover ratio, it's a kind of activity. That's why where you get the word that is a turnover, in that case you have to easily match with this activity ratio. So the data turnover ratio, it's a activity ratio. Now the proprietary ratios show the proprietor's solvency to solve all his data, all his liability. Okay, so quickly, so easily. So that's why the proprietary ratio is related to the solvency ratio. Now the next one which is remain, that is the option number, that is a C listed. Operating ratio. Due to operating ratio, we will easily recognize our profitability, because if you see, what is the operating ratio? Operating ratio means EBIT. That means earning before interest and tax. So it is a earning before interest and tax. That is a profitability ratio. And what is a non-operating? Non-operating, that means which is after interest and tax. So interest and tax, this is a non-operating activity. You cannot operate. You have to pay this kind of expenses to them. But in the operating ratio, you can operate your sale. You can operate your variables. Okay, we will deduct the sales minus variable is a contribution. After the contribution, we will deduct the fixed cost. We will get a profit. So this is an operating activity. So you can manage your sale, you can manage your variable cost, you can manage your fixed cost. But if once you get a profit, yeah, the interest is fixed, you can't operate it. Then and the taxes is also going to be fixed, so you can't operate these two terms. That's why this is an a non-operating activity. I hope so you understand the concept. And for this question, what will be the our right answer? Our right answer is option number C, that is 3, 1, 4 and 2. So option number C is our right answer. Okay, hope so you understand. Now next question which is in your screen, which of the following ratio are taken into consideration by a banker? Okay, who is considering the ratio? Banker. For what? Before sanctioning loan. So what a banker has in having his in mind when he is sanctioning loan? So what ratio he has to calculate, he has to analyze before sanctioning loan? Isn't a proprietary ratio? Option number B, stock turnover ratio. Option number C, debtor equity ratio. Or option number D, all of the above. So first of all, we will quickly see the concept of these all these options which is given in your question. So first of all, the proprietary ratio. What proprietary ratio is? Proprietary ratio is the proportion of the total asset financed by the owner. So the formula for this, that is you can see the shareholder fund, or you can say that is a proprietor fund, and from whom we are going to analyze them from the total asset. So this is the formula of the proprietary ratio. Okay. Now the stock turnover ratio. Stock turnover ratio is the ratio goes the frequency conversion of the inventory into the sale. Okay. So here is a conversion of the inventory into sale. So what is the formula? That formula is cost of goods sold divided by average inventory or stock. This is the formula of stock turnover ratio. Now what is the debt equity ratio? You know that that is a debt divided by equity. So from this option, if you are a banker, if you are a so what you have to consider in your mind before sanctioning the loan? So isn't a proprietary ratio is convenient? Yes, it's convenient, but it's not a compulsorily to see. It's not directly affect the for the liquidation of the debtors, because banker have to see the what are the liquidity is, what are the ratio which in which they provide the as early as complete their dates and equity. Okay, so for this you can see that is a proprietary ratio. You can see the option number C is the correct answer, that is C. Option number C is the correct answer for this question. Now the question option number the question which is in your screen, that is assertion. Assertion is given in your screen, and the reason behind of this is we have to see what is going to be correct or not. First, that is assertion is ratio analysis is one of the tool employed to know the financial health of the concern. Reason isn't the first you understand that is ratio analysis is one of the tools employed to know the financial health of the concern. Isn't reason is given, that is ratio analysis is not the only technique available to the take the investment decision. So ratio analysis is one of the tools employed to know the financial health. Yes, due to ratio analysis, we easily recognize the financial health of the concern statement of the company, okay, of the firm. The reason behind of that, the ratio analysis is not only the technique. Yes, ratio analysis is not the only technique in which you will take a decision of the investment decision for the company or the for the firm. So what will the right answer? Yes, assertion is also true and the reason is also going to be true. So, and reason um is a well explain the assertion. So the option number A, that is the both A and R the true, and the R is the correct explanation of the A. Okay, so right answer will be here, that is here, that is option number A is the right answer. Now next question which is in your screen, what does a high payout ratio indicate? High payout ratio indicate, what is a high payout ratio? High payout ratio, that means a company is having his payout ratio, that means how eligible, how is in his stand, that is he pay to his equity shareholder, to his debenture, yes, to his debenture as a debt or as a equity. Okay, so when he pay, you know that for the debenture, he must pay the interest to them. There is a boundary. If they earn the income, if they earn the profit or not, there is a boundary. They are bounded to pay the interest to them. But what is the condition of the equity? If they do not earn the profit, they are not eligible for the payment or the dividend to the equity shareholder. Okay, so the high payout ratio is what indicate, if your company is having a high payout ratio, that means he is paying to his equity shareholders. Okay, including, yes, later they have to pay if they are earn the profit or not. But if they are paying a high ratio, high profit, then they are eligible, they are able to pay the equity holders. So what will the right answer? Option number A, a high earning per share. No ma'am, high earning per share is related to the equity. There is a equity, but their earning per share, it's not justify the payout ratio. Okay, then the management is not enough to plugging back profit. If they are not enough to plugging back profit, that means they are not eligible to pay to equity shareholder. Okay, this is also going to be our answer. Then the management is plugging back the profit, but not, this is the question is talking about the high payout ratio. How much we don't know. Then the option number D, the company is earning high profit. Yes, if the company earning high profit, then he has he has an ability of the paying a high payout ratio. He has ability to maintain his high payout ratio. Yes, so according to this, option number D is our going to be correct answer over here. Now, next question which is in your screen, identify the true statement of the following. First option, the balance sheet is always prepared from the point of view of the business, but not from the owner. Yes, this is true. The balance sheet is always prepared on the point of the business. Yes, when we prepare the balance sheet, we prepare for the business, not from the owner. Yes, we have mentioned there the owner's capital or proprietor's capital over here, but this is not for the owner, this is for the business. Okay, now yes, option number 1 is true. The financial relationship of the business to its owner is shown in the balance sheet. Yes ma'am, because we mention in the liability side the owner's capital. Okay, so it's definitely show the relationship of a because we are preparing balance sheet for business and we mention the owner, so that's why it show the financial relationship of the business and its owner here. Yes ma'am, this is true. Now the third option, that is balance sheet is always related to period of time. No ma'am, not always is related to period of time. Okay, where you can just keep in your mind, if the always word, okay, this kind of word is coming in the statement, though you can easily eliminate that statement from the option. Because most of the time always word create a complexity in the question. Okay, so the option number A is the correct answer. That is 1 and B. So option number A is the correct answer for this question. Now moving toward the next question, which is in your screen. This is a really important aspect of the accounting. You have to learn this Indian accounting standard. I will take a extra lecture how to remember this, how to get in tongue in your tip of in your tongue to remember this kind of question. So uh, the list 1 and list 2 is given in your screen. That is a intangible asset, A, B, impairment of asset, C, interim financial report, and the interest in joint venture. There is a accounting standard is given in your list 2. So intangible asset is related to accounting standard 38. That is intangible. Okay, intangible asset, which is not tangible, that is intangible, that is a 38, 3A 38. Okay, now impairment of asset, that is a 36. We can say in Hindi that is impairment of asset. We will learn that is 36 ka akada. If they are a pair of the asset, that means they are, if you are create a pair, that means having a same features, yes, but there is an impair. So impairment of asset, that is 36 ka akada. So Indian accounting standard, that is 36. Now interim financial report and the joint venture. For interim financial report is related to the Indian accounting standard 34. Yes. Okay. And interest in joint ventures is related to the Indian accounting standard 31. Joint venture, interest on joint venture, that is the 31. Okay, so the according to this question, what will be the right answer? That is option number B, 4, next 3, next 2 and 1. So the option number B is correct answer for this question. Yes. Now, next question, which is in your scheme, Schedule 3, Part 2 of the Company, Schedule 3, Part 2 of the Company Act 2013 deals with the which of the following? Option number A, format of balance sheet. Option number B, format of the profit and loss account. Option number C, format of trading account. Option number D, format of the cash account. So this is a factual question. Yes, you have to, if you are not knowing about this these schedules of the Company Act 2013, you will not answer it properly. Okay, so there is I will tell you the what is the financial statement is according to the division of 2 to the schedule 3 is to be prepared every company to which the Indian accounting standard apply. Division 2 schedule 3 consists of the following, that is a general instruction for the preparing the financial statement of the company is that required. Okay, so balance sheet is the for the part 1. Okay, balance sheet is for part 1 format. In part 2, the profit and loss account along with the general instruction is given in the part 2 of the schedule number 2. Schedule number 3, sorry. Okay, schedule number 3. And in schedule number 3, part 3, there is a general instruction for the consolidated financial accounting. Okay, so the part 1 is for balance sheet, part 2 for the profit and loss account, and part 3 for the consolidated financial accounting. So what will be the right answer is talking about the part 2, and you know that the part 2 is related to formation of the profit and loss accounting. Okay. Yes. Next question. Okay. We are ending over here. Thank you so much. We have completed more than I think more than the 10 questions over here. We will continue our lecture with this kind of question. And thank you so much for being with us. Okay.